Alrighty, let's go ahead and get started. Welcome everyone to the HUBB Live Trading Room. Great to be back with you all during this trading day and during trading hours. First and foremost, as always, we do have to cover our disclosure disclaimer agreement. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing's to be taken as personal investment advice. It's always available on our website, be read in full detail at your leisure, or feel free to take a screenshot of it now if you like. But that's the main point to take away. Other than that, we are still in Led Zeppelin mode. If you happen to tune in with us for Trade Finder yesterday, you would understand that recall and know that that's still the mode that we are currently in. So let's see what Rob thinks happens from here and get right into it. Rob, you out there?
I am Zach. How are you? Hey, everybody. Welcome to Hub Trader Live. And just for those that may not be rock and roll fans, the Led Zeppelin reference is the song remains the same, meaning that we're still in the same mode that we've been basically this whole week. And that is kind of just this little melt up scenario because there's no real significant news to drive the market, which will change next week, where we have the Fed meeting at the end of the week, and then August 1st is supposed to be when tariffs are re-implemented. And while I'm talking about that, before we get any further, I will show you a chart of the alert that I just sent out in the AI portfolio, which is to close out this EWU trade alert that was sent out. We had a move up and then we had a pretty significant move down. We did form a bit of a triangle. A couple things here. First of all, it's not the greatest triangle from the upper trend line. The lower trend line's pretty solid, but the upper one has significant gap here. We are breaking higher. We are nearing the highs from that jump up in June. So we'll keep an eye on that and see if this continues higher from here. But as much as I'm not a big fundamentals fan, and I'm not a big news fan from a shorter term basis, because I do think significant news events, a la the tariff stuff, can move the markets on the shorter term basis. The market tends to have already discounted it on a longer term basis. So the news reactions tend to be a little bit shorter. However, we are right in the middle, at least based on what the administration has said this morning, in the negotiations. Apparently, there's been some sort of a deal that the administration and President Trump is happy with in Japan. Maybe we get the same resolution in Europe and we get a continued move higher. But with two big up days like that, we want to take that gain, and then we'll keep an eye on it. When we look at the AI, technically this wasn't an AI result. There was some European stocks that didn't have good options, and so we substituted the EWU as a general position on that when we were moving higher. We got the correction down to the 50-day moving average. We moved back higher. You could look at this and say, well, there's probably a little bit more to run here to the upside, and maybe there is. Might have closed that a little bit early, but we've been in it for a while, and we had an initial move higher, then we had a 50% drawdown, and now we're back into a decent gain. So we don't want to risk that with the time that's moving. We're right at the money on the calls, and that's where the greatest amount of volatility is, as you likely know already, in the options world. So any sort of news of the negotiations aren't going well, or President Trump's unhappy and the tariffs are going to be higher and all that, could immediately reverse that. So we're going to take advantage of these two nice up days in a row here, especially when we've been in the alert for quite some time. But we will keep an eye on it, and if we were able to break above this resistance area, I'll give you the exact price there. It's just under 41. We might do something else here. Perhaps some sort of good news comes out. So it was June 12th was the high. If we take out that high that's right at 40.77 and move up to 41, so I'd be looking for a move to 41, then perhaps we can do something else. The other consideration is looking at the DMI. You can see that we are getting a decent break between the two directional indicators, decent separation here that could continue, but the ADX is still very low down here around 15, and that's got to get back up above 20. That will likely happen, and it also has to get back above the negative directional indicator. If we break above 41, that could set up nicely for a continued run, and if that occurs, we will probably revisit that alert. But for now, it's prudent to go ahead and, especially when you had an early gain that went down into a drawdown and then is now back profitable, prudent thing to do is to take it and go look for something else, which we will look at the AI signals, as you know. So we do each and every week here. But we'll take a look at the S&P first, cover off what's going on. As I mentioned, no real significant news. The only thing that came out was an apparent good deal between the US and Japan. There's going to be a 15% tariff, and Japan is going to invest in some things in the US. So that's another thing that I think the administration is pretty happy about and talking about a lot. They had that big infusion from that Saudi wealth fund when they had those negotiations. That wasn't really too much of a tariff situation. That was just a trade agreement. And we'll see how these continue to play out. It does appear, for whatever reason, that countries are a bit more willing to make agreements now. Maybe they're just tired of it. We talked about in the past, and it was something that I opined about, that when we talk about these tariff deadlines and they keep getting pushed out, does it get to the point where the countries are kind of thinking, that's just a negotiating ploy as well, and not really wanting to negotiate? But that sentiment seems to have changed a bit, where these other countries seem to be willing to deal a bit. So if this can all get pulled off the way the administration hopes, then it is going to be good for the US, because we have been being taken advantage of for decades in trade, where we weren't charging any of these other countries tariffs, but they were charging us tariffs. And we're in the driver's seat because we're the consumption engine of the world, the United States. So we'll see. I mean, this could play out pretty well. Certainly a lot better than the shock and awe that occurred back in April. You coined this the tariff tantrum, Zack, and it seemed to catch the markets off guard. And now we're just kind of trending up here. So from a purely technical standpoint, we are still, look at that. I can go ahead and extend these lines a bit in this ascending pennant pattern. The further we go, it works the same way as a triangle. I just don't like to trade these as much as triangles. I don't think the breakouts follow the rules as well as triangle breakouts do, but nonetheless, pennant patterns tend to yield breakouts. And the closer into the point of the, or the further end of the pennant pattern we get, works just like a triangle. The closer to the point of the triangle you get, the sooner the breakout's going to be. And usually the more volatile it'll be when you really go into a narrowed area like this. So for right now, we're melting up. I still talk about there's a slight chance, but it's pretty darn small, that the Fed would surprise the markets and cut rates. I think that the more heat that's put on Chairman Powell, the less likely he is. I might be 100% wrong on that. It might be the exact opposite, but he knows that his term is up in May, and I think that he's going to do what he thinks is best. But the data has not shown a significant inflationary increase based on the tariffs that have been in place. And that's what's frustrating the administration, because that's the talking point that the Federal Reserve has said has stopped them from cutting rates so far, as they didn't know what the impact from an inflationary standpoint would be on the tariffs. And perhaps we're getting to a point where they're starting to see it isn't significant, and maybe they will cut rates, but I still doubt that'll be in the July meeting. That would certainly be a surprise, which I think would break us to the upside out of this pennant pattern. Um, does a non-event, because there just isn't that much of a chance priced in of a cut in July, would that move us down? Because the breakout of this ascending pennant obviously will be up or down. If we go down, we're just creating the wave four, which at some point in time we'll do. And the upside might bring us up to this 650 target that the AI has set, or I added in the 261.8% extension from the primary, the first zigzag that started. As you know, there were three others, but I've taken them off the charts because I was just tired of seeing how messy it was. We know there's a whole bunch of fib levels in between here, and I thought that this would be an area where we would bump our heads and move down, and every time one of those fib levels gets hit, it acts as a little bit of resistance. So this kind of a melt up type scenario is exactly what I thought was going to happen. But we will get a breakout at some point in time of this pennant. At least that's what happens the majority of the time. Real quickly, let's look at the bond market. So if we take a look at TLT, we had gotten a little bit of a move up in price on the 20-year, and therefore down in rates, but we've ticked down a bit in price, and we got to keep an eye on that. As you know, we had this, talked about this numerous times, really nice channel pattern when this downward zigzag completed. When a zigzag completes, you normally go back to the B wave. In other words, you retrace the entire C wave, and as soon as we hit that, boom, we started a zigzag to the downside. And you see this over and over and over again, which is why I like zigzags so much. Again, as you all already know. And then this downward zigzag went right to the 100% extension, and then we moved up. We broke to the upside out of this little triangle, tested the 50-day moving average, holding the 10-day moving average. So if that C wave is done at the 100% extension, and just as a quick reminder, normally what happens in a zigzag that has an extended C wave is you go back and test a previous fib level and then move down to the next extension. That could be what's going on. I hope not, because if prices come down that far, that means yields and rates are going up. That would not be conducive for the equities market, and that could certainly be a driver for a downside breakout out of that ascending pennant pattern. Taking a look at the dollar real quick. Dollar is cooperating pretty well. Don't like the tick down today. Don't want to see that start back down. I don't want this to be, okay, we got to a wave 5 level, went back, tested the 50-day moving average, and then down we go here. And my feeling has been, as long as the dollar stays lower, that's good for companies with international exposure. Netflix actually said that when they had their earnings report. They beat earnings, but they also talked about the primary reason that they beat earnings was because of the benefit from the currency exchange, with the dollar being lower. And that's why we like the dollar to hang around lower. And if you heard me in anything over the last few weeks, last several weeks, I've been saying I don't want to lose the dollar. I don't want to see the dollar come down here to this wave 5 low. I think that would start raising questions on whether or not the dollar is still the currency of last resort. We don't want there to be any doubt about that, to where we start to get a snowball effect of other countries selling off the dollar holdings. And that would create a snowball effect, and we could continue even lower, and that creates all kind of problems. So let's just hang around down here. That's the Goldilocks scenario, but we do have to keep an eye on what the dollar does over the next couple of trading days with this breakback down below 97.5. Real quickly, taking a look at the crypto space, we had what President Trump called Crypto Week last week, and all of the cryptos ran up in advance of getting that Genius Act and the other legislation regarding cryptos passed, the stable coins, etc. And we're just consolidating that move at this point in time. We do have a small triangle here. Maybe we're trying to break to the downside, but we'll see when the calendar rollover occurs and what BITB. I've mentioned this before as well. IBIT is another one that allows you to trade very liquid options on these Bitcoin ETFs. So it's a good way to leverage in trading Bitcoin rather than spending a great deal of money to buy partial coins. So we'll watch this. I wouldn't be surprised to see it tick back down here. It could come back down, maybe even fill this gap, maybe even test the wave 3 high if we do get follow through to the downside. But it seems like the future is up in the crypto space. Ethereum played a major catch-up role here. And you already know, you've heard me say this enough, I know, that I don't like it when things go vertical and I don't like it when things go too far from the 10-day moving average. So we're doing exactly what occurs when things go vertically up. Oftentimes they come vertically back down. Nonetheless, we get back down towards that 10-day moving average. I actually thought we would spend a little time at 25, but we blew through that and we got too overbought. And this is why I don't like that either. You've heard me say when you get to a point of resistance, you don't want it to break it when it's already overbought or oversold on the downside, because those moves tend not to hold. And that's what's going on here. We're coming back down. We were just too far from the 10-day moving average on the high in Ethereum, but news came out and in the crypto space, we had a big rally out of it, but it played a major role of catch up, just like we did on SLV and the DIA. I thought I'd show you the chart of the Dow because it is right back up to that 450 level, having a nice day today, outpacing the S&P so far at least. And if we can somehow break above 450, we might be off and running. We do have some rotation going on in the equities markets. There's some money coming out of areas that have been really overbought and valuations that are at pretty high levels. And normally when that occurs, institutions tend to take some gains. They don't usually sell real hard because they take some time to unwind a position or at least partially unwind one and then look for where's the value, where can I have a greater return in a sector that has underperformed. And we talked about that back when the Dow was here in June, and it did outpace both the S&P and the Qs as it ran up to its February highs. We pulled back, consolidated really nicely, but we're right back there again. So we will watch the Dow, and if it can break 450, then that's hard to ignore. And I would imagine that we'll see some AI signals in that area. And just to show you a quick chart of the Qs, pretty nice little move up here. I like it when it goes in this 45-degree angle. You can see a pretty tight channel here on this move higher on the Qs, holding the 10-day moving average, but you can see that we aren't getting quite the volatility that we had coming off the April lows. And that's because new money is going elsewhere on the Qs. Some money's going in, but not to the degree that it was. But that 45-degree angle is very nice. The issue here with the Qs is the fact that we don't have a zigzag in the queues, so it's very difficult to know where that wave 3 would end. We take a look at the DMI, the ADX turning down. It's telling you, even though we're melting up here, some of the strength is coming out of the earlier move, mid to late June. When we ran up, the ADX was going up. Now the fact that it's curling over, it does seem pretty clear that there is market rotation going into different areas of the market. So I would expect that we'll see some signals that we haven't seen for a while in the AI. So let's just go right there and take a look. And we have BURL, Burlington. I was looking at this doji yesterday. I thought we might get a little bit of retracement here because we were a little bit separated from the 10-day moving average on the high, but we're just kind of ticking up here and we're still a little bit overbought. It's a 72% score. As you know, I will send out alerts on anything 70 and above in the AI, even though 75 is where that box turns green, the right side of that pill looking thing that the AI gives us for the target. And it's up around 290. So we still have room to run, but I'd actually like to see this pull back just a hair, but it's quite interesting nonetheless. And then we come down and there's nothing really on the low end of things that you would look for a fade trade. The lowest score is 37. Let's go back a day, and then we can actually, I was already back a day. My apologies. This is last night's chart. This one I do find interesting, and you may very well see an alert come out on this afternoon, right after we finish this class. But as you know, I like to look at these with you before we send out the alerts. And when we take a look at this move, this is what I wanted the Burlington to do. Is to tick back like that, because yesterday on the high, we were a little separated from the 10-day moving average. This could even come back down to 80. I don't think we'll wait for that. But you can see the target price is all the way up at 88, and it is a 75% score. Now, when we look at this, the other thing that I like about this is the zigzag. And you know, that's the crux of the AI impulse portfolio. Look where this B wave is. Not only is it just past 50%, it's right at the 50-day moving average. So that's a really solid point of support for a C wave extension. Now, note the interesting thing here on where the C wave extensions are. The primary one is a little bit below that 88 target of the AI, but then the 138 and 161.8% extensions are above it. So if we were to get an extended C wave, we could go higher than the AI target. So they're kind of framing the target, I call this, those two fib levels. But even if we only go to the AI target, that's still a really nice trade. And if we only go to the C wave 100% extension, also could be a very nice amount of movement on eBay. It does seem like the consumer is still spending. Amazon said that their Prime Days were very successful, and I think that's helping to add some support if you like the fundamental type thing, which the AI does take into account. Part of the reason that I like the AI is it does have economic and macro models in addition to technical indicators. So it's very broad. That gives us these AI signals, but I really like this one a lot. So don't be surprised to see that come out within the next hour or so after this class ends. Now we go down here and we do have some lower ones. Lennar, which you look at as far as a potential move up. The score is lower. It did have an upward move, but on a low score. And we had some positives from DR Horton. Let's see how that stock is trading today. Following some decent news, you can see that. So even though that score on Lennar is quite low, could that one still work? It's not worth taking the risk on that because it is way too low of a score and right on the border of where you would look to fade it. So we will pass on that one. Just thought it was interesting to take a look at. And then Nail here, which has gotten a bid also because of the DR Horton results, et cetera. So it's too far from the 10-day moving average here. And even though it's a low score, it might have follow through as well. So I don't think that's a good fade candidate either. We can come down here to this very low one, Washington Trust Bank Corp, but you can see that it already gave it to us. We had this failure already, and the high of the day did hit the zone for making this a wave 3, taking out those highs at 30, but then it immediately sold off and we're already at the fail zone. So really not enough to do anything from a fade side of things on this one. But I thought it was interesting to show you. We keep talking about this, and as I mentioned, the data scientists at HUBB keep harping on the fade trades are good. They're just as good as the higher scores. Don't forget those. So there's opportunities on both sides. This gives you a good idea of how that can play out, but it's already happened. So we wouldn't do anything with that now. But barring a scenario like this where you're already down there, it does show you how these low numbers can work on the fade. And if you're wondering what are you talking about, a fade trade, that means you go the opposite way. So when you have the high scores, 75 or above, you go the direction, like this is the wave 3 bullish search. So you go that direction, you go bullish. But if you have a very low score, then fading that means you go the opposite direction. So you'd be bearish. But again, we're already at the fail zone there, but I thought that was interesting. And then looking at Target, Target is an interesting case right now. They've lost their way, or they did. They're going through some major rebranding, and seems like the market is giving them the benefit of the doubt, possibly because of how big this downside breakout was. Another indication of what you hear me say all the time, that an ascending triangle, descending triangles don't mean that the market's going to break up or down. There's an ascending triangle that broke significantly to the downside, and you could even make it a little bigger triangle and move it over there on the lower trend line. I wouldn't argue with drawing it either place, but nonetheless, it was an ascending triangle that had a significant move lower as people just lost favor with Target. Actually, was up at 170 last summer in August. We've got back to school coming, and I think some of these retail stocks are getting a little bit of a bid in them because of that, looking for a better next quarter results based on back to school, et cetera. And so this is interesting, but it's right in the middle. So it's not something that you would trade or put an alert on. It's just interesting to watch and see if it moves up and can hit that target. See what I did there, Zach? See if target can hit its target. Anyway, we had this really significant move down, and I think this is a combination of things here. It's not only the markets giving it a little bit of a positive viewpoint on their restructuring and the likelihood that they could come back and be extremely relevant again. But you're also getting a scenario here with Target on rotation, market rotation, that I talked about in the beginning. Grossly underperformed Amazon, et cetera, even Walmart. And so that's what I was mentioning as far as institutions looking for places. You find a stock like this that still a quality company and a quality stock that's just been beaten up, and you can get some nice moves out of it. You would want to look at the volume chart, and you can see it's not significant as far as the volume. So institutions haven't poured into it. But I think that's what this rotation is going to be this year, a little different than other market rotations. In other words, I don't think that, and this is what the institutions have to deal with when they report their quarterly earnings, mutual funds, et cetera, investment companies, is they list the stocks that are in that mutual fund. And nobody wants to see a mutual fund that doesn't have NVIDIA or Broadcom or Netflix or one of those stocks that's in the headlines every day, because that's what the retail public knows. They know those stocks that are talked about a lot. And so they want to keep a position for that reason. In addition to, they probably still want to be in it for potential continued growth in that sector, even though it's quite overvalued at this point in time. So perhaps the rotation is not as significant from a money standpoint as it oftentimes is. So keeping some of the current position and dipping their toes in the waters of some of the other companies that have underperformed. So I find this really, really interesting to see that. And I think that's probably why the signal isn't higher. Obviously, there's so many metrics that the AI uses, over 300 of them, but volume's one. And without a lot of volume, it's going to be very difficult to see a high score show up through the AI. Price to volume always matters. I'm getting off on a little bit of a tangent here, but it's something that I'm really adamant about. You hear me talk about the 10-period moving average rule, the vertical nature of a move, all those rules that I talk about week in and week out. But one of the most hardened rules that I'm a big fan of in the world of trading is price to volume. I don't care what system you're using, whether you're using Elliott Wave, AI, Zig-Zags, whatever, no matter what indicator you're looking at or what trading system you're using, price to volume will always matter, in my opinion. So when we're getting a move up like this, but it doesn't have a significant amount of volume behind it, again, it's going to be difficult no matter what the other metrics are showing to get that score up in the 70 to 75 range. So just a few things that I wanted to show you there. Let's look on the bearish side. And there's only one result, and it's not tradable or looking for a fade trade. It's just kind of going sideways here around this 10-day moving average. And another one that just kind of out of curiosity to keep an eye on. Taking a look at the wave 5 bullish, and you've noticed likely that there have not been a whole lot of wave 5 bullish signals. Well, I think that's twofold. The reason for that is twofold. Number one, when we go back and look at the S&P, it's been moving to the upside ever since those April lows. So there haven't been too many stocks that have followed through all the way on a wave 5 to the downside to move back up. So that's part of the problem, is it hasn't been a market very conducive to those. It works great when the market is going through a sideways consolidation, which we know happens 2/3 of the time. The market moves directionally 1/3 of the time. And when you have that more sideways market, you can have some stocks moving up, some stocks moving down. You get some moving down in a wave 5, and then you get that reversal back to the previous 4, similar to what TLT did, that kind of a thing. So that's played into it. Market conditions, they will change. We will get a correction at some point in time, and we will start to see those results. But the data scientists are also going through, we have conversations every week they're going through and looking at the metrics to see if maybe they have them wound a little too tight. So they're doing some analysis on their own. And as I've mentioned, and I haven't talked about this for a while, so it bears mentioning again, it is true AI. In other words, it's not just one set of data points and that's it. And you just see where the stocks fall. It continues to learn on itself. So it measures the successes, the failures, the percentage movements. If it doesn't hit its target, how far does it go? If it exceeds its target, it takes all that into account and continues to improve what the AI does. So that's what's going on right now. Is the AI is looking at itself to see if maybe there's some areas that were set a little too tight and can start to see some more of those signals. But it's not a very good market for them anyway. So it may just be that, but they are taking a look at it. I just thought I would share that with you. And then if we go look at the sideways stuff, we haven't really had anything too great on the time strategy for a sideways trade. Had a couple fade trades, but this one on BMI, Badger Meter, too low of a score, and you can see why the scores are important. It's already down to the lower boundary, but it wasn't low enough or isn't low enough to fade it. So let's go ahead and go back a day, which is where I started. I was already looking at that ahead of time. And let's see what's there on the, nothing on the bearish side, wave 5 bullish side. That FICO one would have been quite interesting. I'm going to show you that one and take a look at it. You may have heard the news about it and seen what happened to the stock. You can see this is moving down. It's a Bitcoin ETF as well, but it's short Bitcoin. And if Bitcoin were to break out of that downward or break downward out of that triangle, then since this is shorting Bitcoin, this would move up. So if Bitcoin goes down, this goes up. So with the upward move in Bitcoin, obviously it's moving lower. So this might be something to keep an eye on if Bitcoin does break down, but I don't like these leveraged ETFs as much. So I think it would be more prudent to perhaps buy puts on IBIT or BITB if we do get a downward breakout out of that triangle. But remember, it's not a very large triangle, so it would have to be a quick short-term trade. It wouldn't be anything that you would stay in very long, likely. And it may not even break to the downside. It may break higher. But the FICO one I wanted to look at because you can see that significant downward move that occurred there. And then we get the wave 4 bounce back up. We've come down to a wave 5. The only negative here is that we had a 50% wave 4 correction, corrected back half of that move, and then right back down again. As they're talking about different ways of measuring credit now, et cetera, different systems altogether. Is FICO going to be the benchmark moving forward? It doesn't seem like it. So again, when you sprinkle in a few fundamentals like that, it makes you weary of trying to get too bold on an alert. This one might be even more of a fade example here. The score's at 25. To fade it, you want it below that. I would have been if that was like 15, based on that, I would have felt it's a high dollar stock, and to move down, I think makes some sense if indeed they are going to change the benchmark of how credit scores are done, et cetera, and maybe FICO's model isn't the status quo anymore. So that one's quite interesting as well. Just not enough of a signal, not low enough of a signal to try to trade that one on the way back down. One thing that I have been mentioning, so I thought I'd update you on that as well. On these wave 5 bullish scores that are low. What is the fade trade there? Does it continue lower? And it's still coming out almost exactly like what you're seeing here. We will start doing those in the maybe next week, because I'm feeling more and more confident that when you have a low score, it doesn't necessarily mean it's going to continue lower. It normally will go into a trading range. So rather than doing the retracement back to the previous four, like a normal wave 5 buy type trade would be, it tends to stay range bound. Uh, this range that it gives you is pretty wide for doing a butterfly or something along those lines. And um, you would kind of look at maybe an iron condor or even a calendar spread could be something. And so far, um, as much as I like the flexibility that a calendar spread offers, there is flexibility in a butterfly as well if it starts to make a directional move. So one of those two strategies will likely come out. The interesting thing is normally I don't like sideways butterflies, and we haven't had great success with them in the time strategy either. So we're back to calendar spreads and we're going to stay there. But when you have this big move down here with the volatility and a different kind of scenario here on the calculations from the data scientists at HUBB, it's intriguing to look at. But we will probably start on the calendar spread side on the first couple of alerts and go from there. So you'll be seeing those come out pretty soon. And I'm pretty excited about it. The results have been pretty solid. They really have been. All right, so that's about everything I had to cover today, Zach. So if there's any questions, I'm happy to take those now, or we can get back to the trading day. I'm looking at eBay.
Thanks, Rob. Yeah, I got a number of questions here for you. First one's going to be from Maria. Would you agree that INTC is not broken out of the triangle and is tried but keeps closing within the triangle? And then got some other questions for you.
It it looked like it was breaking out, and boy, did we make a good exit on that. There was other factors in there, the time in the trade, et cetera, even though we finished with a $20 loss, which was very small. We couldn't have timed that exit any better. And I would disagree, Maria, that it hasn't broken out. Sometimes this is what happens. You break out, and it hasn't. What would normally happen if we were forming a larger triangle, because perhaps what you're looking at, Maria, is you say, okay, well, we could take this upper trend line here and then extend this one, and we still have a larger ascending triangle. Uh, and I wouldn't argue that point because it looks pretty clear here. But what normally happens when you're building a larger triangle is you get a bit of a false breakout one way and then a false breakout the other way. And as I've mentioned in the past, you can't have two false breakouts. That tells you right there that it is a larger triangle that's being formed. So from that standpoint, it doesn't quite meet that criteria. We bring this back down. You can clearly see why the trend line was drawn there because we had the test of it there in January. And then in February, we broke above it and traded back through it, broke above it, traded back through it. So we had resistance, then we had congestion, and then we tested it again in May, tested it again in June, and tested it right there in July before we got a little bit of a breakout. So to me, it's breaking out, but testing the breakout at this point in time. So this one it's a good one to talk about, Maria, because it is open to some interpretation. And I'm never upset with somebody that disagrees with me. As Zach always mentions in Trade Finder, that's what makes markets. disagreements. If everybody viewed things the same way, then there'd be no trades, there'd be no trading, there'd be no markets. You have to have people viewing things opposite in the opposite way. What we try to do is move as many percentages in our favor as we can so that we're better than just a 50-50 toss of the coin. And the AI has certainly helped that. So if that's the way you wanted to draw the triangle, I wouldn't make a strong argument. I just feel that this is a better place to have that trend line because it was, support back in October, and I just feel like that is the more appropriate place to put it. But I wouldn't make a big argument if you felt like that was larger. So I do view this more as it broke out. It's testing the breakout. It's one of the three ways that triangles break out. Sometimes they take off and run. Sometimes they're a false breakout and the big move is down. And then other times it breaks out, tests it, and then runs. So I wouldn't be surprised to see a little bit of rotation into Intel away from some of the other big tech stocks. So we'll have to wait and see. But it's a good point of discussion, Maria. So I'm glad you asked about it. But that's my viewpoint on it.
Yeah, thanks, Rob. You covered that very well because Maria did follow up with on regards if moving the triangle up was correct or not. So that was a great explanation you provided on where that would be best or how you see it in your eyes. There's a follow-up question as well with a few symbols here, but they're all in the same category. Thoughts on all AI stock, NVIDIA, SMCI, PLTR, etc. Do you think they all continue to melt up? Thanks as always.
I do. And I do think I don't think we're going to see the big runs that we had in the past because I do think some money is rotating elsewhere. So yeah, I think the melt up is the correct way of viewing it. I don't think we're going to get those big volatile runs to the upside anymore. I think the market's going to get a bit more balanced. For so long, those big seven stocks have been driving not only the Qs but the S&P as well, and I feel like that's gonna alter a bit. So yeah, I would agree.
Thanks. And Maria said that was extremely helpful. We'll go on to the next question here from Renault on Rocket Lab, RKLB.
This one is a constant one, and if I'm remembering correctly, it's not the same person asking about it all the time. We're getting different people that are viewing this. And we looked at this, was it yesterday, Zach, or was it Monday that we looked at Rocket Lab?
Both.
Yeah, and there we go. Too vertical, too far from the 10-day moving average. Back down here. I believe yesterday I mentioned that if it held 45, or it might have been Monday, then I would find it interesting again. And it has broken back up. Now, the only negative is that we're trading near the low of the day, but we'll see where things close. But the fact that it came back down to a very logical place, exactly where I'd drawn the line, and has bounced, it has allowed the 10-day moving average to catch up. It actually came back down and touched it. And so I think that this is interesting again. When we look at the DMI, notice what happened. This is what we were talking about before, is that these two lines were coming in. Now look what's happening. The positive is ticking back up. The negative is ticking back down. The ADX, remember that even though the ADX is ticking down, it's above 40. That's not the signal that the move is over until it breaks back down below 40. It can hover in this area and just give you the indication that there's still strength to the move. It's still strong, even though it might be ticking down just a little bit. But if you go above 40 with the ADX and then it breaks down below 40, and this is all in our section in the education area of the website, talking about the details of our confirming indicators. We did an hour on all of them. So that's just a reminder of how the DMI and ADX works. So as long as that ADX is staying above 40 and we had a a perfect example of what happens when you go too vertical and too far from the 10-day moving average. The fact that it's held right there at 45, I think is bullish. So I would look for this one to perhaps continue higher. And if you want this to hold and you want it to run, you don't want it to do that again. You know, it's fun when you're in one that runs vertically like that, but if you stay too long, you give it all back because the IV comes out and the retracement. What you want is for it to move a little bit more like this, like it did from 35 to 40, more in a 45-degree angle. So from here, if it continues to do that, that could be very strong. So I think it did what I would want it to do, to look for a new entry. If you're in it and you stayed in it, moved down, I'd continue to stay. There's nothing right now showing you to exit this position if you're long. It's just you should have expected this retracement move. And now it looks like it might want to run again. So, yeah.
Next up, we have James. Can we look at CMCSA, and the ADX looks wild.
All right. I'm anxious to take a look at it then. I always like a wild ADX. Yeah, I guess the wild part you're talking about is it looked like it was setting up, and I'm glad you asked about this one because this is why I focus so hard on the ADX breaking 20. You could see this amazing separation between the two directional indicators. They look good. The ADX is moving up above the negative directional indicator, but it comes right up 20 and then rolls over. And so we got a little bit of a pullback, but now it's setting up again. And the fact that it broke back below 20 and is moving back up, I still want to see it get back above the 20 area. But you could keep an eye on this one. This is an area that I think could see some of that rotation. And we could be looking for a continued move back to the upside. If it hadn't come back down and reset itself below 20 to start trying to go pierce it again, I would have been less interested. But it's been through a very long consolidation. The normal consolidation lasts 3 to 4 months, and this started back in April following that drop. It's not a big mover, would be the only negative thing from an option standpoint. So I think I would look to put on like a debit spread or something. So you had some sort of a protection against the theta decay that will occur in this. But I think this one looks like it wants to try to break out, and a move above 36, I think would be quite interesting. And we're there, we're right there now. So we'd want to break that and break that high from early July and see if it doesn't run up towards 37 and a half or so.
All right, thanks, Rob. We still have a good amount of questions outstanding, so I'm going to pass through the second symbol from Renal for you and come back to his third if we have time. It's going to be AMD.
Yeah, the blast from the past. It was just kind of forgotten. Zach remembers when AMD was asked at every single webinar we ever did. Somebody asked about AMD, and then NVIDIA took over the mantle, and AMD just kind of got forgotten for a bit, and then has made a really nice run. Had this gap up, a little bit of FOMO, I think, right there, consolidating over the last week. The thing we have to be careful of AMD is that ADX is getting very close to breaking below 40. It did it once before and then ran back up again and got back above 40. But the positive directional indicator immediately dropped back below the ADX. This could possibly be setting up for another run, but it just feels more like it's going to be choppy sideways from here until it creates that wave 4 corrective move out of AMD. So I would expect more of a trading range with maybe a slight bias to the upside, but we'll have to keep an eye on that ADX. If it breaks back below 40 and breaks back below that positive directional indicator, because note that when it broke below 40 here, it didn't break below the positive directional indicator. So it got up here right to 40 and broke down, but we never got down below the positive directional indicator. That's when you really know it's over. So if this breaks back down again and these two turn around, we could go the opposite direction. But right now, and that's all we can do is look at the data that we have at any given moment. It looks like kind of a range bound to maybe slight upward bias on AMD. But that's another one going back to what Maria was asking about. I don't think you're going to get this kind of stuff anymore, or at least for a while, where we went straight up, a little bit of a correction, straight up again. I don't think it'll be like that moving forward. Even that was a pretty vertical move back in May. I think it's going to be more of a sideways, choppy trading range with a slight upward bias. That's the way I see AMD right now.
Thanks, Rob. Question from Bill. When you say a trade will be released on eBay, is that through EWO or through HUBB? So perhaps just a quick clarification on which publication that'll be.
EWO.
And don't know specifically if the portfolio yet, but maybe you wanted to elaborate on that, or I guess that's dependent on which strategy you decide to go through with.
Well, it'll be in the AI Impulse portfolio.
Thank you. And we have a question here from CJ on GEV, Iron Condor.
Let's take a look. Where did it go? Maybe I got the wrong stock.
Yeah, GEV on the
Oh, V.
Iron.
Okay, I was gonna say, I thought that when you started GE, I thought that's what it was gonna be, and then I thought you said GEB. Sorry. Um, this is, was the behemoth, and then we did the tractor beam. We got to 600, the round number. Yeah, I think an iron condor makes a lot of sense right now after that big upward move. Little FOMO there, and catch that volatility. Yeah, I think that's a good idea. It should consolidate here and likely will consolidate and maybe back up a little bit back down towards that 600 level, could possibly even come back and fill that gap. But yeah, I think that's a good call.
Very well. What is the optimal range for Delta? This is from David, 25 to 35.
It is, with obviously 30 being the midpoint there. You do want to kind of take a quick look at what the gamma is. Gamma should be higher, and this is the tricky part. The shorter you go out, the higher the gamma is. So, the normal course of things is let's give it plenty of time to move or break out. But if you go too far out in time, then you kind of shoot yourself in the foot a little bit because the gamma goes down and then you lose that gamma delta acceleration. But just on the delta, if you look at a delta curve, that lazy S, that it looks like that, the part where it starts to go vertical on the delta curve. So we start with this kind of a horizontal, flattish start, and a little bit of a curvature, but not much. And then it kind of goes up vertically, and then it rolls over again at the top. It's not a linear lower left, upper right curve, which you would think it would be, but it's not. And I always thought that was done because most people traded at the money, and not only were they paying all that extra extrinsic value, they were losing some of that acceleration. And I think the market makers liked doing that. And over time, you've probably seen this, I don't know how long you've been trading options, but there was a while when the open interest was so thin, it made it a little trickier trying to trade down there that far out of the money. But as option trading has grown, people are starting to learn more. I've been preaching it for 20 years. We're starting to get people that are figuring that out, and you're starting to see a lot better open interest on those out of the money options. And so there's still some that are are thinly traded and a little bit difficult. Um, but kind of in that 3 month range as far as the distance out, you still can keep the gamma where we need it to be. But if you go a little further out in time than that, you tend to lose that. So it would be better to put on a trade for 3 months if you want to be in it for a while, and a month goes by and it hasn't really moved the way you thought. Close that one out and roll it back out again, so that time decay doesn't eat up too much of it. But um, yeah, that's the sweet spot on the delta right there between 25 and 35.
Thanks, Rob. And we've had a few questions coming from CJ regarding the GEV Iron Condor. So this is my fault for not clarifying, but the way it was asked, I thought perhaps was just asking your thoughts, which you provided your general thoughts on an Iron Condor for the GEV trade. But CJ was referring to the 1607 GEV trade from Delta Neutral, which is Jeff's portfolio, and said we are already in an EWO GEV Iron Condor, and this move just busted is to the upside. Was that a Jeff trade that Rob isn't aware of? So no, Rob is aware of Jeff's trades just as Jeff is aware of Rob's trades, but they're never going to comment on each other's portfolios in regards to an existing position. So Rob provided his general thoughts on what he would see for that trade, not talking about Jeff's trade specifically. So just want to clarify that any questions for Rob or Jeff should always be for Rob or Jeff's thoughts individually or separately, exclusively from each other's portfolios.
Yeah, and just to further your comments, Zach, you're spot on. Yeah, I know what trades Jeff are doing. I assume Jeff is doing. I assume he's um, familiar with mine as well. We're able to see what each other posts. So I did take the question as would now be a good time to put one on. So I didn't take the question as referencing Jeff's Iron Condor that's already on. And so, yeah, we don't comment on each other's portfolios for obvious reasons. And so, yeah, that'll be a question for either send into support to Jeff or ask tomorrow night during the insiders meeting. Bring that up. I imagine he'll probably cover it. Um, so, yeah, I didn't realize that um, that's what you were referring to as the existing position. I took it as would now be a good time to put one on.
Thanks, Rob. I see we're 4 minutes, well, actually well after time at this point. We still have good questions coming in as usual, but we know you only have so much time to stay away from the trading desk with the hour that you're generously providing to begin with. So, as always, happy to stay on as long as you like, but at 2:04, just let me know how many more you'd like me to pass through.
Yeah, just give me one more, and yeah, we did get extra time, but in fairness, we also had to cancel a couple because of travel commitments. So I don't mind going a little bit longer this session, but there's still a lot to do in the trading day. So I do want to get back to that. So let's wrap it up with one more question.
Absolutely. So we will wrap it up with MNST. MNST.
Good old Monster Beverage. I'm glad you asked about this. This one did have a pretty decent run already. And this is kind of one of those areas where I think we could see some market rotation. We had a question. I'm going to switch this real quick over to Pepsi in the insiders meeting a couple weeks ago. And you could see it was just lagging here because so much money was going into the big tech stuff. And, all that retail money coming in from the money markets that we've been talking about is going into the stocks that people are just familiar with the names. And this is not normally a stock that has a whole lot of quote sexiness to it. In other words, it doesn't tend to move a whole lot. It's more of a boring type of a um, uh, stock for caution in a portfolio, like more of a like core type holding, a little bit of a defensive type sector. but you can see what just recently happened with Pepsi. It had that nice breakout move, and that's see that whenever I was talking about volume earlier, see that big spike? That's institutional buying right there. So that's some rotation that's occurring there, probably some short covering involved in that too, but also some buying. So coming back to Monster, it's already had a little bit of a run. So clearly the chart up to that was a little different than what you saw with Pepsi. But I think if we can stay down here for a little while and don't immediately retrace that move, just hang around here for a bit, right around this 60 level, even a little bit below it. I think there will be some rotation into a stock like this, and it could see a further extension. The wave 5 could be over with. It is right smack in the middle of the tap box, and maybe a retracement back to the previous 4. But also feel like if I'm right on the market rotation, and this can kind of hover down here a little bit, maybe it attracts some money too. So I would find this one interesting. Now, to go long, in fairness, even if you're a bit aggressive, you still want it above the 10-day moving average. And since that wave 3 high is right there, let's just say we would like to see Monster break above 60. And if it does, then I think it's taking another leg higher. And this could just be a big zigzag right here. And that wave 5 could move over. So it would indicate that the wave 5 isn't done. We're just having a little bit of a corrective phase here, and we happen to come down right to the 61.8% level, and that could yield a further move into the upper end of the tap box. So I think that's a distinct possibility. It needs to hold right here. We've got plenty of room for it to run, as you can see. So let's get it back above the 10-day moving average and back above 60. And then I think we could see some support there if I'm right on the market rotation. And of course, I think I am. You know, you always think you're right. We aren't always, but we always think we are. But that looks really, really interesting to me. That's a big zigzag, and the wave 5 may not be complete yet, especially with what you just saw that occurred with Pepsi. So I feel like that was a pretty good comparison. So what a great session this was. I think last week we had no questions, Zach, and so y'all came armed today, and you asked some really, really good questions. So I thought this was a great session. I hope you all felt so as well. Thanks, Zach. I know these things, you've got 1,000 things going on in the background that you have to keep track of. And appreciate you as always. Thanks everybody for watching. I am going to go start taking a look at eBay, see if that is a possibility from the option side of things. And perhaps you see it. If you don't, then you know that the option part didn't work out. But I really like the chart set up there. So we'll see how that plays out. So thanks everybody. Appreciate your time. Have a great rest of your afternoon. Talk to you in the insiders meeting tomorrow night. Take care, everybody.